JP Morgan, because of that, debanked the president. Jamie Dimon said he doesn't enjoy debanking people, but he has to do it because of the rules, which he's glad are changing. Don Jr. said that's why they got into crypto, is out of necessity after being debanked. This is a well-known David. Welcome back to another episode of Token Narratives. Bitcoin had a little bit of a bouncy poo today, gentlemen. Apparently, the market manipulators over at Jane Street have stopped their algorithmic dumping of Bitcoin in order to flush out the degenerates and leverage off their arbitrage that only they have as an authorized participant, one of the handful of authorized participants for the IBIT ETF, or that's what I'm told at least. There's probably something else to it, so let's get into that. By the way, how you guys doing? I'm Graham Stone. We got David Sencil and Alex Richardson here.
Doing good. So where do you want to start with that? You mentioned two big things. Bitcoin having a decent little jump here. And then the Jane Street story. So maybe start with the Jane Street story.
Yeah. What happened with Jane Street? So, well, first of all, the headlines came out, right? That, here, let me bring back the other chart for now. That basically it was all, the last crypto winter was all Jane Street's fault. Jane Street is like one of the biggest, Wall Street quant firms. They supposedly had insider information that allowed them to dump their Terra Luna, or what was it, UST position before everyone else, because they had an insider at Terraform Labs, and then they could dump, and that allowed them to save their bacon while the rest of the market, everyone got wrecked. $40 billion went down. David, I know you're a Jane Street apologist. So
not so much that. More of the people in a bear market. This is the classic bear market things. They just feel bad and surly. Maybe it's that time of the month, Graham. And you're looking for somebody to get your pitchforks out and murderate. And I think Jane Street fits that role right here, right now. Wintermute, Jane Street. So yeah, it seems, they were not honest actors, insider trading, whatever, but they didn't precipitate this collapse. The collapse was inevitable. And with or without Jane Street's push, it would have happened. So that's,
we know that because Do Kwon was just sentenced to 15 years in jail for fraud. The Luna, the UST token was an algorithmic stable coin that didn't make any sense and was bound to collapse. The yield, the 20% yield, was not sustainable. So the whole thing was a house of cards.
Yeah.
Jane Street just happened to have allegedly inside information to save their own bacon at the expense of everyone else. So that's just par for the course, though, in Wall Street, in banking.
Yeah, 2008.
Don't hate the player, hate the game.
Yeah, but I think the more interesting thing that you brought up, though, is because this is news to me. You just said this before we went live. Was that so? Whether Jane Street has responded to this this new attention by deleting a bunch of their posts on X and supposedly pausing some of their evil market making. Is that right, Graham?
That's the allegation. The posts have been deleted, and
definitely,
supposedly, as soon as this lawsuit came out against Jane Street, again, by the lawsuit has been initiated by the Terraform Labs bankruptcy, whatever it is. Anyway, as soon as that lawsuit hit the books, supposedly the like clockwork 10 a.m. Eastern sort of market manipulation that was happening every day. Programmatic market manipulation that was happening every day, and like causing people to get the leveraged traders to get wrecked day after day. Supposedly that stopped. Now the theory is that Jane Street, as one of I think just 4 authorized participants to redeem and issue IBIT ETF shares or something between Bitcoin, has this like arbitrage opportunity that they can sort of like a profit by people getting wrecked, and between like what the ETF price is and what the actual spot price is or something like that. And anyway, those shenanigans supposedly, people have pointed out, stopped immediately when the lawsuit hit, and thus Bitcoin has the thing that has most recently been holding Bitcoin underwater stopped, and now we have a little bounce. That's the theory. Who knows if that's actually true?
Yeah. So, Alex, you wanted to title this episode Bitcoin's Moment of Truth. I think this ties into why. What's up with that?
Well, basically, we're testing the 200-week moving average. Last time we came down to this level, we broke below it, and we stayed below it for like 16 months in 2022.
Good God.
Yeah, so like you need to be prepared for the scenario of 16 months of depression. I know that's not what crypto Twitter wants to talk about. I was hoping we could all avoid poverty this year too, but it just looks like the beatings will continue until morale improves. Because last bear market, we went below it, took almost a year and a half to get back above it. And there's other indicators too, like last bear market, we went below the average realized price. We're still not below that. We went below the MVRV Z-score reset to 0. That still hasn't happened. So yeah, it kind of looks like we should be prepared for the rest of the year to be kind of boring. I guess if you insist on being bullish because you're already so wrecked, it doesn't even matter anymore. The bull case could be that Bitcoin is bigger and more mature and institutionalized. So it no longer needs the big, deep drawdowns of previous cycles. Yuri and Timmer is the global head of macro at Fidelity. And he said last week on X, he basically called the bottom at 60K. He says it's anyone's guess whether 60K is the low, but his guess is that it is. And he's saying that after a few months of backing and filling, the next cyclical bull market will get underway after the next price wave takes off. So you could take the bullish stance here. But I think you could also argue Bitcoin just really has a strong relationship with the 60K level because it battled with this area twice in 2021 and then again for most of 2024. So we're back here again 5 years later. It should theoretically be strong support. I'm leaning towards more pain, but if your time horizon is like 2 or 3 years, then I don't know. This is a fairly attractive spot, I think, to bid, even if you're going to be underwater for a few months.
Yeah, I mean, for me, I think I said this in the newsletter last week. I'm really just kind of paying attention to what's happening in macroeconomics, TradFi land. I feel like that's kind of overriding everything. And so I think if we have, I don't know, war breaks out in Iran or something like that, that causes risk assets to puke. I think Bitcoin will probably puke with it. It does seem like the AI stuff is getting a little frothy. You've seen it kind of run up, and I would almost say crescendo a week and a half ago. So if that comes down because of things like Ram from Bits and Bits is talking about, like the recognition that this CapEx spending is kind of unsustainable, that could cause the AI and AI related tech stocks to deflate, and Bitcoin has been highly, highly correlated to software. What is it? IGV, I think.
Yeah, the iShares.
So again, yeah. So that's kind of where I'm at. Is that I think Graham, when did we talk about this in the weekly earlier this week? I think maybe the biggest indicator to look for is when Bitcoin starts to diverge meaningfully from risk assets, specifically tech, right? As in, if it stops going down as much or more than tech, or God willing, starts to go up a little bit while tech goes down, that's to me kind of when I think we might have reached the end. Because I think Bitcoin will bottom before TradFi assets. I think that's usually the case. That's kind of where I'm at. How about you, Graham?
Yeah, I think you guys are on the right track. I just want to bring up this other chart that Alex, you added to the doc. This is the gold versus BTC long-term chart. And in 2014, the gold BTC ratio bottomed after 14 months. In 2018, same thing. It bottomed after 14 months. In 2022, it bottomed after 14 months. Now, in this cycle, we are 14 months in. And yeah, I mean, that's so there's a little bit of hopium for you.
Yeah, that's good hopium. The Forward Guidance Roundup crew, they were speaking about this, I believe, last week. And they were noting that it wouldn't be surprising. It's not their base case, I don't think, but it wouldn't be surprising if gold just stayed around 5,000 for a year or two. And even if it did that, it would still be a great buy, especially if like the miners or things related to that. But that would also kind of maybe fit with this thing here where gold stops moving, right, and stays still, doesn't really lose value, and then Bitcoin and other things run. So we can hope. Just on the further doomer stuff though is Michael Howell. I have a couple of his podcasts lined up that he did, I think, this week. I haven't listened to yet, but I believe the gist of his current thoughts are that liquidity is going to continue to get worse. And the U.S. government has not really done QE at all by his model. And so it doesn't currently look like they're going to start doing that anytime soon. And this will be bad for risk assets and Bitcoin. Now, here's the wrinkle. I think I've been saying this recently, at least in the newsletter, but Felix from Forward Guidance and Tyler and them in their roundup, they've been on the bandwagon that the economy the U.S. economy is beginning to reaccelerate. That last year was actually a recession, papered over by just the insane capex spending by the AI, kind of kept the markets afloat. The kind of Main Street economy will reaccelerate in 2026. Now, here's the problem for people who are in risk assets is actually when Main Street is doing well, when you have this reacceleration of economy, manufacturing, all this kind of stuff, money moves out of risk assets and moves into these kind of these other areas of the economy. So risk assets don't do particularly well. Things like mining and manufacturing services, they do well. Risk assets do not. So that's a little worrisome. So you could even see the economy start to do well, and that would not necessarily translate into Bitcoin doing well.
All right. Let's switch gears then and talk about crypto XAI. Now, Stripe, the global payments provider, just published their annual letter, and in it they wrote, "In our view, agents will most likely soon be responsible for most internet transactions, and we will likely need blockchains that support more than 1 million or even 1 billion transactions per second." Then there was a friend of the pod.
When did this post go out? Was this
yesterday?
3 days ago. 2 to 3 days ago.
So this is probably in response to Citrini's legendary article already. All right, continue.
I think this was the annual 2025 letter from Stripe.
Yes. Okay, so what we're talking about here is potentially a catalyst for Bitcoin and crypto that could bring us out of the doom loop that we're currently in. Wait a minute. There's an explosion of intelligence. All these agents are so much better than I am at everything, except I can't get my Claude bot to actually do anything correctly. Leaving that aside.
There we go.
Leaving that aside, the theory is, right, the next billion users are going to be crypto and Bitcoin users. I actually think the case is stronger for crypto than Bitcoin. We could get into that. But then you have friend of the pod, Hasib's Qureshi's interesting post on this, which I really like the way he framed it. And he's like, you know what? Crypto was never really designed for people. And we all have experienced this. Every time you go to send something, there's like a non-zero chance that you got things wrong. In fact, I did this not too long ago. Actually, deposited some crypto somewhere to I hate to admit it, a centralized exchange, but I sent it on the wrong network, right? And
no,
these guys, I could see it there, and they're like, "No, can't do it. Can't. We can recover it for you, but it's going to cost you." Anyway,
brutal.
So the point is, right, these types of mistakes, it's easy for people to make. Agents, presumably, if you can get them to work correctly, will not make those mistakes. There's no accidentally sending on the wrong network for a machine, right? They know what they're doing. So that's part of the theory why crypto makes sense for the machines as a transaction layer. And of course, there are other reasons as well, such as that, they don't have IDs. The machines don't have IDs, so they're not going to get a credit card or a bank, although I think there are actually ways around that. But anyway, let's talk about crypto XAI. Do you guys have any opening thoughts on this topic?
Tons. First, I would just like to say, a couple of weeks ago, I was kind of blown away or overwhelmed by the AI hype and had a little existential crisis there in Hong Kong, thinking that I was completely missing out. By the time I would landed back in Japan, I wouldn't have a job. I'd be homeless, and everybody in my company would be giga rich with their billions of AI agents, making them hundreds of millions of dollars per second.
Yeah, you have a very narrow window. You have a very narrow window to train up your agent to replace you.
Yes, exactly.
Otherwise, someone else is going to... Anyway, go ahead.
Yeah. No, 100%. So, but I mean, again, I don't think we're there yet. And I think having dug into it quite a bit, we're not there yet by a lot. And this Stripe message here, agents will most likely soon be responsible for most internet transactions. I actually don't think this is going to happen as soon as, I don't know what soon here means, but I imagine it's a couple years away at the earliest. But a lot of this builds on what people were saying, like Citrini's article, which I think is worth noting. One of the things that locks people in is that people are kind of lazy. You don't want to keep entering your credit card information into multiple sites. So you just keep using Amazon, right? Because it's there. You can use it for everything. You don't want to send, like Graham, you don't want to send or use new exchanges or use new addresses because you want to use what you've already saved. And so it kind of locks in people. Agents don't have this kind of problem at all. And so you can see this situation where all of your purchasing is done via an agent. So your agent you ask your agent to go buy you something, and then it's able to then talk to every vendor, verified, reliable vendor, and then go transact for you. So this really kind of squeezes those intermediaries. I don't know. I think Citrini used the example of Uber Eats and DoorDash, things of that nature. But again, I don't think that's any time soon. How it relates to crypto, I think, is, again, a couple years away, though, right? Like the idea really kind of gestated with X402, that protocol, right? The protocol for how agents can kind of microtransact. That adoption has been very, very slow, right? That we've seen. It hasn't been as big as, I guess, people wanted. And I don't see it picking up any time soon. Having said all that, I just want to kind of get the hype out of the way. I do think this is probably maybe the biggest potential narrative crypto has this year, because we're in a bear market. We could be in this for 16 months. What possibility do we have? And it's got to be riding on the coattails of AI. Sorry, so that's my spiel for right now.
I think bag holders better hope that theory is true, because if it's not true, then who else is going to buy our bags? I mean, if the theory is that crypto sucks and therefore it can only be used by bots, thus the next billion users are bots, okay, the second half of that theory is maybe speculative right now, but the first half is not speculative. That's just an established fact. We've had close to a decade to get the next billion users, and it hasn't happened. It's just too difficult. You can think, how quickly did Facebook or WhatsApp or I don't know, World of Warcraft, Candy Crush. These things went to millions of users almost overnight. Like it was just, or Apple Pay, like it was just so easy for people to adopt these things, and crypto is just not, it's just not there. So we better hope that the theory is true, because this is like, in my opinion, this is crypto's make or break moment, because there's no one else left to adopt the technology. And I think it makes sense too. Like you're going to have agents are going to need to rebalance portfolios. They're going to have to do customer support, maybe supply chains, buy and sell stuff. And yeah, the sad reality is that most people just don't really need crypto, but AI agents would need it. So I'm riding on this theory to play out over the next 2 years. Otherwise, I'm not really sure what the narrative would be.
Well, I think the counterpoint to that I've heard articulated is that those businesses that you mentioned were built on infrastructure that took 10, 15 years to get in order. Apple Pay is a perfect example, right? Like there's been payment infrastructure for a long, long time, but it took a bunch of different pieces to kind of fall into place. You had to have really kind of acceptable internet-based transfer abilities, at least on the back end. You had to have a smartphone, right? Really, really good smartphones. And those things took a decade each or more. I mean, I remember internet banking 25 years ago. It was awful. So again, it might be cope, but crypto does feel like crypto needs some of these kind of like big things such as AI. Stablecoins, number one. So now we've got that infra kind of in place. Low transaction fees, fast or almost near instant settlement. So that took a long time to get. And then you need things like, I probably like AI to kind of intermediate most of the stuff that everyone who's listening, and certainly you guys, are used to doing, which is opening up your browser wallet and painstakingly pasting an address and maybe sending a test transaction, things like that, right? That's a no-go for consumers. You just can't have that kind of UI UX. And so an agent, it would be kind of that's an elegant solution. Otherwise, I don't really see another solution that works like that. Anyway, so here's a question for you, Alex, is so we had last year, approximately at this time, a kind of like AI bubble, right? I would say, Graham, correct me if I'm wrong, but I would say it started with something like Truth Terminal and maybe virtuals, and it ended with Fartcoin. Is that kind of roughly the arc?
Basically, and by 1 year ago at this time, it was already dead.
Yeah, it was like November.
The peak of the first,
February.
Yeah, it was probably like November, December 2024.
Yeah. And so in that time we had agents and we had meme coins, but there was all AI related. What is different about this current potential narrative from all that?
Well, in this case, the AI agents are purported to just be actually using crypto to transact, or like that's the idea, right? The AI agents are now empowered in the real world to do things like, buy compute for themselves or whatever. And how are they going to pay for that? With crypto. So the idea is that, like the infrastructure for that, or businesses that enable crypto payments. Let's say you're a cloud or like an AI model, right, that accepts crypto payments. That could be a successful business, right? Because presumably you're going to have a bunch of agents needing to use that. Whereas, the last AI X crypto bubble was, I don't know, something vaguely where it's like the AI is going to take over the world and it's going to have a token, and that token is going to be Fartcoin.
There were a lot of there were tokens.
That's all gone now.
Yeah, virtuals, you could launch an agent and there was a token associated with it, right? Like it was.
Yeah, exactly.
Yeah.
There was a lot of hype around that. I, for one, got wrecked. Hopefully, I can use that to work as a tax loss.
Nice, but
it's also
go ahead.
I was just going to say, this time around, it's a lot more clear how useful AI is. Like a couple of years ago, people were just writing slop and creating stupid pictures, but now it's being fully integrated into so many business models and industries. You can see the job losses and the big companies replacing all of their back office workers with AI. Like it's no longer just a hopeful narrative. It's like it's a very clear thing with a clear cut path to world dominance. So I think it could be like the Gartner hype cycle, where maybe last year and maybe this year too is where we overestimate it in the short term, and we had our crash, and now we're going to slowly build up on our slope of enlightenment as more and more projects come out with clear use cases. That's how I would describe the conditions now.
Yeah. So I know you've written some things down here, but like from, I guess, a retail investment standpoint, is there any token we can buy or something like that to get in on the action? What are the different verticals
what's the ticker
of AI? Well, you don't have to mention a ticker in particular, but like, what are the opportunities? It's not like last time where you had meme coins and I don't know, like virtuals was just this like ecosystem of weird agents with tokens that you could spin up.
Yeah, well,
it doesn't seem like
you can look at Dragonfly's holdings. You mentioned Haseeb. He kind of not unearthed, but he popularized the agents will use crypto narrative a few days ago with his post. And if you look at Dragonfly's holdings, they have like, for example, USD AI is a stable coin that earns yield by lending to AI startups and collecting interest. Basically, they did the seed round for Kato AI, which is a crypto search platform. They did the seed for Protea, which is a distributed GPU network for AI inference. But again, these are all private investments, so these are off limits to the plebs. I guess if you really want the retail opportunity, and obviously not financial advice, everything I'm about to tell you could lead to homelessness. But I think the biggest opportunity in crypto, like the crypto AI trade, is probably BitTensor, ticker symbol TAO. Just because it's the biggest market cap cryptocurrency in the AI crypto narrative right now. It has the most coherent pitch. It's got a lot of traction as a very active ecosystem. Like if you go on X and you search BitTensor subnets, there's so many different things popping up, lots of activity. It's not just hype and people talking about it. There's actually people using it, lots of projects being created. Pantera Capital is long. Digital Currency Group is long. Grayscale is long. So, I mean, there is a consensus amongst pretty established players that there is some substance there.
To BitTensor
what does,
in particular.
Not to put you on the spot, Alex, but what does BitTensor actually do? Is it like a tensor bandage for your bits?
I don't even know what you just said.
Sorry.
Yeah, okay. So I'll give a brief summary. So there's a few problems with the way AI is currently being developed. So obviously, the entire industry is pretty much off limits for normal investors. Anthropic and OpenAI are private, and then Google, Amazon, Microsoft, Nvidia as the infra play, they're already mega caps. So there's just not a lot of opportunity, not a lot of upside to capture anymore. Secondly, the big LLMs are closed off and no one can contribute to them. So it means OpenAI and Anthropic, they have like a monopoly on truth, and they can censor, they can push certain political views, and it also just means it's inherently lower quality. And it's very extractive as well. Like with the current model, AI is just always going to be a SaaS that you pay inflated prices for. So BitTensor addresses all this by using token incentives to basically de-aggregate AI development entirely. So instead of one lab training one model, you have a global network of miners that are all contributing specialized capabilities, and they get paid based on output with TAO. And the way it works is there's these things called subnets, and each subnet is like a mini network within the network trying to provide some kind of useful AI service. So it could be compute or inference or like predictions, particular little data sets. For example, the top subnet on BitTensor right now is called Chutes, CHUTES, which is subnet 64. So its ticker symbol is SN64. And it's a serverless, it's like AI inference infrastructure. But if you go look at the app, it kind of looks like Perplexity. Like you can create images. There's like a little news section. You can ask it questions. You can search. There's also Ridges. I think that's the number 3 subnet. And they run AI software engineers to replace humans. There's 128 of them in total. That number could go up in the future if the chain's capacity grows, but right now it's 128, and they all compete with each other. If you register a new subnet, then the chain looks at which subnet has the lowest price, and that subnet gets deleted and replaced with whoever just registered. So it's like a self-optimizing competitive AI marketplace. And they're like the beta on
to register. To register is you have to have a certain amount of tau, right? Like you can't just.
Yeah, no, it costs.
Nobody
costs
can
money.
just register, right? Yeah.
No, you need to have a certain amount of tau, and that number changes depending on something that I can't remember. And it's very volatile. It goes up a lot, like gas fees. It could be millions of dollars. It could be tens of thousands.
Okay,
And-
so Tau, the token, benefits in a tokenomics way from that, and then there are other tokens that
each
also
subnet has a token, right?
Yeah, each subnet has its own
trade.
token.
Those
You can go to
those tokens also trade.
Yeah, you can look at them on the BitTensor Explorer. I think it's called Tau Stats, and you can look at all the different subnets and their price, and they're priced in Tau. And each ticker symbol is the subnet, like SN subnet, and then there's 128 of them. So those could be like the kingmaker trades, or they can easily go to zero. I mean, this is really new speculative stuff. And the argument is like, how could these services possibly compete with OpenAI? Like these market caps are like tens of millions of dollars. Like how could you possibly beat ChatGPT and the rest of the LLMs that have trillions of dollars? I'm not really sure how to answer that, but I guess it's like a bid now and think later type of scenario.
Yeah, I mean, I haven't dug in as much as you have. The thing that I've noticed from people who on my timeline who talk about it are the big thing they're looking for is, does the subnet turn a profit if you strip away the subsidies that they're getting? And so that's number one. And it is whatever business model they have, does it lend itself to having a moat, right? Because that's the other big issue. And so those are the two things that most subnets apparently do not have. They don't make any money, and there really is no kind of concrete future path to revenue if you strip away the subsidies they're getting, and or their business model is easily replicatable and turned into another subnet, which would then undercut whatever they have until then it's a race to the bottom and very little value capture. So it does seem really cool because, like you said, it's very Darwinian, right? So that's the interesting thing. I think the problem for me though is that like you said, there's 128, is it 128 of these?
Yeah,
man, you have to really go through. You have to go through carefully and try to figure out those two big questions and probably a dozen other smaller ones to see if it's worth like investing in. Or I guess you just buy Tau and do it that way, express your belief that way.
Yeah, I think like if you really want to get exposure, it would probably make sense to have like 95% Tau and then have a small percentage playing that beta. But if your subnet gets deleted, your coins get automatically liquidated to Tau, so it's not like 100% loss.
Interesting. Yeah, and the only other thing I would say is, again, I was being my typical wet blanket self, but a lot of people that I watch very closely are writing this narrative. You obviously mentioned Haseeb, but Jordi Alexander, he replied to Haseeb's post, basically agreeing, saying, "Yep, I think this is going to be AI crypto round 2." So that was a big signal for me, and he does a lot of early investing as well with Selene. And then, kind of the biggest sign of all for me. You said it's AL. Is it Al? Al God?
Yeah, it's Al God.
Al God, the world famous Al God. He had been dormant on my timeline for, years. And very recently he started posting again, talking about AI. And so the fact that he is kind of, I guess, come out of retirement and is interested in things. He posted something today saying like, if you haven't been buying on this dip, then you're a loser or something to that effect. So that to me is a big sign that there are probably a lot of really good opportunities if you do the due diligence and you find them and invest early. And I don't know if this narrative is ready right now, but the kinds of quality people who are looking at this carefully means that probably everybody should be looking at this carefully. And maybe in a month or two or whatever, everybody will then start talking about this. So,
all right, listening to you guys, I'm starting to get FOMO, so I've got some homework to do here. I think we're going to have to come back maybe next week. Each of us will have our top 3 BitTensor subnet picks. All right, let's move on one more topic here for the week, away from AI x crypto and over to something that we all know and love, which is debanking.
Love those banks.
So Yeah, the old debanking narrative is back. So JP Morgan admits to debanking the president after the January 6th attack. And looking at the notes here, Alex, I believe you wrote these. It says in brackets, it was literally just boomers loitering in a room. Nothing happened. Does that refer to the Jan 6 attack?
It's the most overrated political demonstration of all time. Like, you can watch videos of security guards waving the people in. They go in, they take some selfies with a statue. I think like a window may have got broken, and then they left. And then the media said it was an armed insurrection against democracy. It's like, wow, that you have a really low standard for feeling threatened. But anyways, side issue.
Yes. So JP Morgan, because of that, debanked the president. Jamie Dimon said, he doesn't enjoy debanking people, but he has to do it because of the rules, which he's glad are changing.
Doubt.
Don Jr. said that's why they got into crypto, is out of necessity after being debanked. This is a well-known, David. You've spoken to Don Jr. Or no, Eric. Is that Don Jr.?
No, I spoke to Eric. I don't know who. So they both have talked about this, though. Don Jr. and Eric have both talked about the debanking issue. And there is some doubt as to whether that's why they got into crypto, but at the very least, it's a good narrative, Graham. It's a good narrative.
I definitely think he was pandering it when he said that, because like it doesn't really make sense to say we were tired of being discriminated against by the banks, so that's why we launched Melania Coin at a $10 billion valuation. Otherwise, we would have been debanked again. We can't let this happen to anyone else.
Also, World Liberty Financial, they are a bank now. They have the official bank license, so they're on Team Bank to some degree.
Why are we talking about debanking this week? Is there a specific reason?
Yeah, because JP Morgan admitted finally to debanking the president after the January 6th attack. And in response to all the debanking revelations, the Fed is moving to remove a part of their guidance called reputational risk for banks, so that debanking doesn't happen in the future, theoretically. Reputational risk in bank supervision, it's like the potential that negative publicity could cause a decline in the customer base and create litigation or revenue reductions. So, like, in plain English, bad headlines, even if they're fake, they could turn into real losses for a bank. If customers find out that a bank has a bad reputation, they could withdraw their money, cause a bank run, people get hurt. So therefore, banks need to minimize reputational risk, which is kind of weird because reputation is subjective. Like, politically exposed people could be loved or hated. And I also don't really understand how reputation could lead to a bank run. Like, if you're a JP Morgan customer and you find out Donald Trump is also a JP Morgan customer, are you going to run to the bank and withdraw all your money? Like, if you find out Donald Trump shops at Whole Foods, are you going to stop shopping at Whole Foods? I think these regulators just make stuff up to make your life difficult sometimes.
Yeah, or they make regulations so then they can do what they want to do, which is debank people and control them through different means. These other cases of debanking, is this all under that regulatory, what's it called, reputational risk statute that you have listed here?
Reputational risk is an American regulation, but other countries have similar things, or they don't even need to cite anything. So, like, the most obvious one besides the Trumps was the crypto companies during Operation Choke Point. But there's also like the Canadian truckers that were protesting in Ottawa, Nigel Farage in the UK. But it's kind of one of those things where no one really cares about it until it happens to someone rich and powerful, because debanking has been going on for a long time. Like, even people who are just mildly influential, you've got like 50,000 followers on X and you say the wrong political opinion, those people have also been debanked for a long time, or they get, their Stripe account shut down, or PayPal bans them, or they're banned from Visa and MasterCard, or Facebook Marketplace doesn't let them on anymore. And so I guess with what's happened to the Trumps, now it's kind of made it a national, global issue. It's reigniting like a conversation about whether banking is a privilege or it's a human right. Like it's like a utility, like water or electricity, rather than
the right to transact.
And I guess the main question is: does cryptocurrency actually help does it actually prevent you from being debanked is the narrative.
Yeah, but only if there's a big enough self-sustaining ecosystem, place that you can actually use crypto, right? It doesn't work when you can't use crypto unless you convert to fiat, because that's the gateway that gets you, right?
But it's not even that, Graham, right?
But besides it, no, but if because it's permissionless, these things.
Well, no, so that's Bitcoin. That's Bitcoin. But most people don't transact in Bitcoin. They transact in stable coins, which are
but even stable coins are not really though. Only at large scale. At a small scale, stable coins are permissionless. Anybody can spin up
right now.
Yeah, right now. Exactly. So yes, you're right. They could flip the switch and KYC every person who interacts with a stable coin, I guess. I don't know, but there's so many.
No, you don't have to do that. No. So all you'd have to do is you'd have to go to Amazon and all these, payment processors, basically anyone who's exchanging money for goods and services, and you say you have to do some diligence with your customers, right? And so then there you go. Then they give that information to the stablecoin issuer, and you can do it that way. So yeah, if you're not touching anything like that, then it could be relatively permissionless stablecoin.
Yeah. So exactly, that's what. That's what I'm saying. If there's like an places you can spend crypto, that then it can be permissionless.
Yeah, but I just think in practice, the majority of what people are going to spend on stablecoins are going to be through probably bigger players. So I don't know. I don't see Bitcoin or crypto affecting this at all. If anything, it'll be like the internet in the. So it's like the internet is going to be a net positive, unmitigated good for the world. It's forward to 2026. Social media is killing girls, and China's a crazy surveillance state. Oh yeah. Unmitigated good for the world. So I mean, again, I'll be a wet blanket here and say maybe in theory you can route around debanking, but in practice, for most people, no.
And I think right now the SWIFT system and the traditional payment rails are actually more private and anonymous than stablecoins. Like the SWIFT system is like a giant tornado cache. It's a big crypto mixer. Once wires get sent out of one country, they just disappear, and different jurisdictions have a lot of trouble going into other countries and investigating these things. There's so many cases of these scammers that target elderly people in the States and Australia and Europe, and the money gets sent to India or Pakistan or wherever, and they never get caught. Like these things happen almost every day. They get reported on the local news channels, but you never hear about anything ever happening to them. On the other hand, Tether, Circle are constantly seizing things and sanctioning addresses. The United States is very good at sanctioning and seizing crypto addresses, seizing Bitcoin. So yeah, the sort of like unconfiscatable narrative needs some more work. The infrastructure is not really there yet. If you really are a politically exposed person and you're worried about censorship, most people will tell you you're better off making an anonymous LLC in Wyoming and connecting like a Wise account to it and using that as a way to pay rent and go to the grocery store and keeping your payment history separate from your personal identity. Otherwise, it's not really practical to try to use Bitcoin at the farmer's market or paying your rent.
Could you just to walk me through that workflow there again one more time?
I'll DM it to you.
I'm just going to make some notes here. So anonymous account, Wyoming LLC. Okay.
Wise. Yeah, definitely. Also, like, again, we've talked about this a lot, Graham, but the Canadian truck protest thing was the perfect example of this. There were lots of donations in Bitcoin, right? And then the government was like, oh, everybody who donated Bitcoin, we're freezing your bank accounts.
Yeah, because they knew they had a connection between the Bitcoin and the bank account.
Yeah. But also they can see where the donation address is, right? Like they're like, donate to this address, right? And so all that stuff is public and on chain. But then you also have the other problem, which is the protest gets the Bitcoin, right? And then the government freezes the accounts that the donations are then going into on like crypto exchanges. So then they can't.
Yeah, exactly.
Right. So, and then let's
that's what I'm saying. It only works when you have like a self-sustaining ecosystem, an insular ecosystem of crypto that doesn't touch fiat.
Yeah, but let's take it a step further. Let's say that there are a bunch of I don't know, 7-Elevens, convenience stores, downtown, supermarkets that accept Bitcoin. And so then protesters, they have this Bitcoin, which can't be censored, and they go to these stores. And at first, the stores are happy to accept this Bitcoin. But after a day or two, the government knows exactly where the donation addresses are, and they see that there's transacting in the supermarkets, and they go to the supermarkets and they say, hey, if you continue to do this, we're going to shut you down. We're going to freeze your bank accounts. So then the supermarkets the supermarkets will definitely stop accepting any and all Bitcoin transactions. So I don't know.
All right. Well, I think that's a suitably black-pilled moment to end the episode, guys. No ray of hope. Okay.
Well, the one ray of hope, like, okay, so we didn't talk about this, and it's just been everywhere, is privacy, right? Like the privacy coins. There was a really, really cool, I'm going to write about this in my newsletter tomorrow. I put it in the news section. There was a really cool thing I hadn't heard about before called proof of innocence. It's it's offered to privacy coins, and basically it allows people to voluntarily opt in to prove that your private transaction, isn't a part of some blacklisted set of actors or something like this. To me, this is a really, really cool idea. I don't know how in practicality how well it works, but it solves this problem where you want to have private transactions, but also you want to have the government have the ability to not have any visibility into it. And so through the magic of ZK, it allows people who want to keep private transactions, but then reveal information saying, I can prove to you that I wasn't one of these nefarious actors and that my transaction was clean. And so you have things like that. And that to me is really, really cool. So I think you could see these privacy projects start to adopt extra things that make governments a little more accepting of them, perhaps. And to me, that was a very positive thing to see. I hadn't heard about that before. So I like that. How about that for a little hope?
That does sound promising. I know, David, you love to have governments approve of everything you do. Basically a simp for the government.
Yeah. I remember famously our that one heated conversation between you, me, and Corbin, and I was talking about how people should pay taxes, and you and Corbin were just like, "What? Who is this lefty, hopeless? What is it called? Hopeless chud?"
Yep. I don't know. I got nothing. Let's
maybe both.
All right. I'm going to look up what chud is after this.
I think you have a Chad,
let's wrap
right?
it up. Let's wrap it up.
Chad and a chud. And chud is like.
What's a good way to end? We just say goodbye.
Yeah, get me out of this.
That's it. We're done. Have a great week.